So we have a question that's kind of like a tax question is what is a qualified charitable distribution? We have this at the end of the year usually, but since tax season just ended, it's kind of good to be a little bit more thoughtful with your taxes.
Yeah, qualified charitable distributions. In our business, we call that a QCD. All right, so if you hear that, that's what that acronym means. And this is by far, I think, the best way to give money to a charity. But there are some criteria for you to qualify for that. You can use money out of your retirement plans, your 401ks, your IRAs, even beneficiary IRAs, those types of things, and you can gift that to charities and not have to pay taxes on that gift, with one major criteria is that it has to be after you reach the age of required minimum distribution, which right now is 72. So if you're 72 or older and you have to take money out of your plans, you can gift some of that money through this qualified charitable distribution to a charity. And so, for example, let's say that you're over age 72 and your required distribution, it's called an RMD in our business, is 10,000. Okay, let's say that I normally give $7,000 to the Second Harvest Food Bank. That's one of my favorite charities. And before 72, when I gave that 7,000 out, I may or may not gotten a write-off on that because it depends on my other incomes, whether I have, the standard deduction, all these different things. But once I turn 72 and I have to take this 10,000 out, I can now give that 7,000 directly to the Second Harvest Food Bank or any charity, and I don't have to include that on my tax return. It just completely disappears. The only thing that ends up on my tax return is that other $3,000. But there are a couple criteria there. Number one is you can't receive the money from the required minimum distribution into your bank account and then pay it, because that's just like a normal charitable contribution. You'll still be under the old rules. The money has to go directly to the charity from your IRA or 401k or what have you. So there's two ways of doing that. Number one, at least within our firm, you fill out some forms and we send it to them. The custodian, in our case TD Ameritrade, sends it to them and the charity gets it that way. Or, and this is my preferred method, you get a checkbook on your IRA and you write out that check to Second Harvest Food Bank, in this case, for $7,000 and send it to them. I like the checkbook too, because sometimes you get things that you'll see in the mail and say, I'd like to give $250 to that. You just write out the check. You don't have to fill out forms. It's super simple. But in order for it to count as part of your required minimum distribution for the year, the charity has to cash that check in this year. So you do not want to send it on the 31st of December because it's not going to get cashed this year. Yeah, maybe October, or something, and you make sure that that check is received and gets cashed, because then you only have to take out, in that case, that other $3,000. You don't have to worry about that $7,000. So really fascinating, very popular within our clientele right now. We do a lot of these.
Yeah, but there's a limit. So if your RMDs are so the limit is 100,000. If your limits go above that, if your RMDs are above that, you can't exclude all of it. And so there is a limitation. And so you should kind of plan for that. If you're going to do RMD or QCDs, how much am I going to do? And then what's the rest of my RMDs I'm going to take?
Yeah, I think that really great subject. Good question, actually, very popular. Lots of people asking about it. And it's, the accountants are probably pointing them to it too, because we seem to get that, around tax time. There's a lot more interest in it, at least for that year as far as that goes. So I think it's, one of the nice things that they did here for charities, and it's a great, great concept. So good question. All right.